Hey guys, let's go today over a gold trade that hit a 1-to-6 risk to reward ratio. So in this video, I'm gonna explain you step by step how you can as well catch these type of trades with my SMC strategy. So let's take a look at this. So first things first, you need to understand that with my strategy, you need to have a higher time frame bias. So in this case, it was on the 1 hour. So if you go on the 1 hour right here, you'll see that we are obviously super bullish. You said we just keep breaking structure to the upside and we are incredibly bullish. So at that point when the trade happened, we were seeing something like this. So as you can see, these ranges are just keep breaking structure to the upside, and the last break of structure that happened was right here. So we are trading between this low and this high. So this was our bullish range that we were focusing in. After we identified the overall higher time frame bias, that in this case is bullish, you need to identify a POI that is as well a bullish POI that we can look for some buys. So in this case, we have two POIs. We have this POI right here, so this candle right here, and we have this POI below right here. So a POI means a point of interest, and as you can see right here, it's the opposite color candle before a move up that contains as well a fair value gap or an imbalance connected to the POI. So in this case, this POI have this little fair value gap right here connected to it, and this one just below have a very small fair value gap right here connected to it as well. The size of the fair value gap doesn't matter. However, what matters is that if you see those two POIs, you see that one of them have inducement / liquidity resting above it, and another one doesn't have anything. So the one right here above, we don't have any resting liquidity close to it that we can sweep. So this POI is not a good one compared to this one just below, because this POI is instead the inducement / the liquidity for the POI just below right here. So this POI doesn't interest me that much, but this one is really interesting. So as you can see right here, we have some rest and liquidity. So what we can expect price to push down to sweep the liquidity available at this low, and then create a break of structure on the 15-minute that will confirm us that this range is ready to push up once more. So this is what we were waiting. We are waiting for a 15-minute break of structure after this POI mitigation. So as you can see right here, our first step, so price swept the liquidity right here and mitigated the POI, so tapped into the POI is now done. So now, as I said, we can go on the 15-minute to identify our 15-minute break of structure. In this case, the high that we need to break for our break of structure for now is this overall high. This is not really interesting. We want instead something like this. So price push down, creates a break of structure downside, and then we will be having a new range that we can break. By the way, my break of structures, as well, some people call them change of characters. For me, a break of structure is just a break of a previous high or low / a break of the previous range. So in this case, let's see what happened. So bam, right here we have a little retracement to the upside, as you can see, but this is not valid according to my rules. According to my rules, we need at least 2 candles of the same color pushing up. So this is only one blue candle, I need a second one. So bam, let's see what happened after. Okay, so in this case, we got our 2 candles. We have this candle and this candle. So now if this is broke to the downside right here, we will have a valid new high that we can look for a new break of structure. So by the way, as well, my break of structures, I use body closures to body closures. Some people as well include wicks, but according to my strategy and my rules and how I trade, my break of structures are from body closures to body closures. So in this case, let's see what happened. Bam, we broke structure to the downside right here with a body closure, indicating that now this is our new range. So as we broke structure to the downside, now this is the new high after the break of structure, and this is the new low. So now this right here would be the high to break according to my rules, and bam, we already got a break of structure above the previous high. So this body closure closed above the previous high, so this is as well a break of structure. So after we identified our valid break of structure, what you're gonna do, you're gonna go on a lower time frame to identify your valid POIs. So in this case, what you're gonna do as well to identify your most extreme POI, you're gonna go on 3 time frames, on the 15-minute, the 5-minute, and the 1-minute. As you can see right here as well, we have this big 15-minute POI. However, what is even better is that if POIs are in discount of the Fibonacci. So this is the Fibonacci retracement. We have the 0, the 0.5 and the 1 level, and the discount level, it's below the 50%, so below this red line. So if the POIs are below, those POIs are even better. Even if they're not in discount, it's not the best trade opportunity. We need POIs below the 50%. So let's go on the 5-minute now. So on the 5-minute, we have as well this 5-minute POI that looks great. But as you can see, in this case, we have as well a little wick right here that we can see even on the lower time frame, that on the 1 minute, we might have even a more extreme POI. So in this case, this step is to identify your most extreme POI in this new range. And in this case, as you can see, the most extreme POI is the lowest POI in the range. So let's go on the 1 minute to identify even a more extreme POI. In this case, as you can see, we have this beautiful 1 minute POI that is even more extreme than the 5 minutes. So what you're gonna do, you're gonna place your entry limit right here at this 1 minute extreme POI. Gonna add a little bit of pips in for spreads, and sometimes price likes to just tap here and push up, so you're just gonna cover that a little bit of pips slash points. And same things for your stop loss, you're gonna add a little bit of points slash pips right here in the bottom to cover liquidity sweeps and spreads as well. So something like this, you know, something like this is great. Then afterwards, you're gonna identify your take profit one. Your take profit one will be at 103 risk reward ratio, so in this case at this little high, and the take profit final would be at the hourly high. So in this case, the hourly high would be right here for around, like I said, a little like 107 risk reward ratio. So something like this is perfect. So let's see what happens. So in this case, price push up, we came close to take profit final, but we still didn't tap it, and bam, we tapped into our limit order right here perfectly, and we just started to retrace like crazy, and we hit our final take profit right here. As well, when the take profit one is hit, so the take profit at 103 risk reward ratio is hit, the safest option is to take some partials out, and as well to place your stop loss to break even. Like that, if for example the trade reverses on you, you will not be in a loss, you will still make some profits. So that's it, guys. This was our trade on gold. Of course, if you have any questions, you can always ask them in the comments and I'm gonna answer them. And don't hesitate to like, share and subscribe to our channel, and of course stay tuned for next videos.